All right, today we're diving into something really fascinating I came across in a technical report about Micron technology. You have a stock that, on the surface, looks like an absolute rocket ship, but when you dig a little deeper, there's a pretty serious warning sign flashing. Let's get into it.
And this is the big question, right? This is the puzzle we're going to try and solve. How can a stock look so incredibly strong, but at the same time have analysts putting out a sell signal? It's a classic Wall Street head-scratcher, and we're going to piece it together.
So let's jump right into the heart of this thing. On one hand, you've got a stock that is just on an unbelievable run. But on the other, you've got this sell signal. It feels a little bit like you're driving with one foot on the gas and the other on the brake. And this, right here, lays it all out perfectly. The report literally says Micron is in a strong uptrend and that its price is accelerating. But then, in the same report, it slaps a sell signal on it, calling it a medium confidence alert. So, what's the deal?
Okay, so before we go any further, let's get grounded with the actual price. At the time of this analysis, Micron was trading at $187.83. Just keep that number in your head, because everything we're about to talk about really revolves around it.
So first, let's make the case for the bulls, because honestly, there is a ton of evidence to support them. We have to understand why this stock looks so good on paper before we can really appreciate the warning signs. I mean, just look at this climb from around $134 back in early September all the way up to where it is now. That is not just some slow and steady rise, that's an explosive move upwards that's got everybody's attention.
You know, the really interesting part is that it's not just the price chart that's screaming buy, it's a whole bunch of different technical indicators all telling the same story. The price is trading above all its key moving averages. That's a classic sign of strength. Something called on-balance volume, which kind of tracks where the big money is going, shows heavy buying. And other momentum indicators like the MACD and the ADX are basically confirming that this trend isn't just strong, it's really strong.
Okay, so if this stock is such a superstar, why on earth is there a sell signal? Now we get to flip the coin and look at the other side of the argument. And this, my friends, is where the plot thickens.
The key concept we need to understand is this idea of being overbought. Now, this doesn't mean the company is bad or that anything is wrong. It just means the stock price has gone up so much, so fast, that it's gotten ahead of itself. The analogy here is perfect. Think of a sprinter. After a race, they're not hurt. They just need to stop and catch their breath before they can run again. And one of the main tools for measuring this is the RSI, or Relative Strength Index. As you can see, anything above 70 is generally considered overbought, while Micron's RSI is nearly at 80, so it's not just peeking into overbought territory, it's deep inside. And listen, this isn't just one little indicator blinking, it's like the entire dashboard is lit up. The report points out that a whole bunch of different independent tools are all shouting the same thing. The stochastic oscillator, the Bollinger Bands, the CCI, they're all signaling that this stock might have flown a little too close to the sun and could be due for a pullback. So, we've got this epic tug-of-war going on, a powerful trend pulling up, and these serious overbought conditions pulling down. So what gives? To figure that out, analysts start to map out the chart, almost like it's a battlefield with key areas that will decide who wins. And on this battlefield, the two most important lines are called support and resistance. The absolute easiest way to think about them is as a floor and a ceiling for the stock's price. Resistance is the ceiling it's trying to break through, and support is the floor that might catch it if it falls. This table lays out those exact levels from the report. You can see the immediate ceiling is up at $191.185. That's just about $4 higher than the current price. The first floor, or support level, is down at $178.77. These are the lines in the sand that traders are watching like a hawk right now. So, with those levels mapped out, the report basically says things could go one of two ways from here. It all comes down to whether the bulls or the bears can win the battle at those key price points. So here's the breakdown. Scenario 1 is the bullish breakout. If the price can gather enough steam to smash through that $191.85 ceiling, the bulls stay in charge. And the next logical stop is that big, psychological $200 mark. But if the price runs out of gas and falls through that $178.77 floor, the bears take over. And that could mean we're heading down to test some of those deeper support levels. And this quote, I think, really gets to the heart of what the analyst is saying. That sell signal isn't a panic button. It's not a prediction of a crash. It's more of a caution flag
They're actually suggesting that a pause or even a small dip would be a healthy thing for the stock. It lets it catch its breath, to go back to our analogy, and build a stronger base for the next leg up.
Which leaves us with the million-dollar question that every single trader and investor faces. When a trend looks this powerful, this unstoppable, is it a sign of even more strength to come? Or is it a warning that the party might be winding down? For Micron, the answer is going to be written in the battle between that floor and ceiling. Thanks for watching.